Hey, my name is Brandon Burton, and welcome back to the Hub channel. We have an amazing show for you here today, and we have Jeff Beamer going to come on here in a second. But in today's show, we're going to obviously talk about Jeff's last trade, what he did there, what's going on in the markets, what we're looking forward to, kind of some headlines, and some other stocks that we're watching this week. Now, Jeff, get on in here. Obviously, Jeff, and if you don't know him, he's a professional money manager and senior strategist over at the Ewo Trader channel. Jeff is our hike and a she guy. He knows what he's doing, so you're going to want to listen to what he has to say. Obviously, last week's trade we put on MRVL, and I know as their earnings came out, they dropped about 6%. So how did the trade end up doing? What happened there, and how did you craft that little exit on that trade?
Well, interestingly enough, the day of earnings, if we can show our little risk graph here, the day of earnings where that green little arrow is, we had the opportunity to get out of this trade at about a 12% return on risk. Now, we actually chose to carry this through earnings because historically this stock does move anywhere around 10 to 12%. However, this earnings, we only got a 6% move out of the stock. So we ended up having a small loser in this trade, around $100 or so. Not bad. It just didn't quite move the way we wanted, but the volatility is still there, and we're still seeing this type of volatility in stocks that are having earnings.
Yeah, I'm seeing that all over the board too. And I don't know if it's because of the macro, because everything else going on in the market. Obviously, we have some topping, and I think you showed this last week when you were talking about the S&P. We have obviously the S&P running up, and with that much momentum, everybody that I've been seeing in the news has been looking for a pullback, looking for, hey, when's it going to pull back? They're the ones that are like super smart, and they're like, oh, it's going to pull back. Well, obviously it's going to pull back a little bit, but when is the question? So seeing that happen in the S&P, obviously that's trickling down and creating a little bit of a volatile situation, I think, for a lot of these stocks as they announce their earnings. So what are you seeing this week in the headlines? What's going on there, Jeff?
Well, it's interesting. They pretty much haven't changed since last week. We still have a Thanksgiving holiday hangover. You'll see that in the charts here in just a moment. We still, even though earnings season is technically over, we still have a month full of earnings. December is full of big names that are having earnings announcements. Even the week of Christmas, okay, the week after, so the 26th through the 29th, that's wedged in there between Christmas and New Year, there is still almost 30 companies that declare earnings that week. So the trend continues. And this week we'll watch bond auctions, but really banks are in the news this week. Lots going on. There's a big conference going on. And with the potential for interest rates being dropping next year or being cut by the Fed rate being cut next year, which is the outlook, then banks are already starting to react to that. So we'll just keep an eye on all these events as we head into this next week of trade.
Yeah, I think so. I agree. Not much has changed, but it is surprising that we're seeing this many earnings going into Christmas. Kind of a crazy time. So is that affecting the markets, or what do you see from last week to this week? What's different in the markets, and what's changed? What's kind of turning your head right now?
Well, we were really at a inflection point last week in a lot of the indexes, and now they are starting to move. And so let's go ahead and jump in to take a look at some of these sectors this week. We're going to start with the Spider Index Trust, SPY. And you see here on the chart, we're right up against resistance. That top headline that I mentioned about that tryptophan effect of Thanksgiving, well, that's still in place. A little bit of volatility, but we're still going sideways at heavy resistance here. Now, one thing I like to do on these broader indexes is, of course, put on my hike and a she candles, and you'll notice still a lot of green. However, if I zoom in on this a little bit, you'll notice we're getting a little wicky up here, meaning we have wicks on the tops and bottoms of these candles. compared to if you look 2, 3, 4 weeks ago, these big green candles that have no wicks on the bottom, that is indicative, with these candles being green, of a big uptrend or a solid uptrend. And now we're getting what I call a little wicky. We're going to keep an eye on that. Now, if we jump over to the NASDAQ and look at the Qs, we'll start with regular candles first. But the Qs are beginning to roll over. You can see that we had potentially a really bad day today before the NASDAQ started to rally late in the day. However, if I put on my Heikin Ashi, not only do we have a confirmed sell signal in the Heikin Ashi candles, but I've got other indicators, including RSI, a proprietary indicator, parabolic SAR. Everything has, well, not everything, but most everything has triggered a down move for the NASDAQ. And I find this very interesting, giving some of the names yet to declare that are, and I'm looking over at another monitor to see Adobe, Nike, Oracle, Broadcom, all those stocks that are NASDAQ oriented stocks still have earnings yet this month. So we'll be keeping an eye on that. Interestingly enough, the winner here, and partially this has to do with not only interest rates, but kind of a broader outlook on the market, is the small caps. IWM has busted through that area of resistance. We had that upward sloping wedge that was actually very bullish. Okay, when we get this kind of triangle or this wedge here, and boy, did we shoot out of it last week. We had a 1% follow through today. No need to even look at a Heikin Ashi chart, because this is a bull this is a bull trend confirmed, and this thing is beginning to rally. Any hedges you have, or in case maybe you have some bearish positions, if they're still worth anything, you might want to take those off while this thing shoots higher. Now, one thing that is not shooting higher, in fact, is moving lower, is oil. Okay, and if we look at USO, once again, pretty easy to see that this is moving lower. Okay, USO is what we're looking at here. It's dropped back down into my trend channel that I've left in place, even though we popped out of it last week. Today, Friday, we dropped back down in it. Today, we dropped about 1% more, and we're getting to retest these lows that we had. And these are pretty moderate support here at about $68. Okay, so we're about to retest those lows, and we could end up dropping down to under $65. 62.5 could be in our future here on USO if the trend continues. Okay, so that's very interesting. I still see some sticky pricing at the gas pump. Okay, now crude oil and refined gasoline don't go hand in hand. They're loosely related. Okay, but that's just something easy to kind of look at driving by your neighborhood gas station. Is, hey, what are prices doing here? We did see them come off their highs. We did see them drop a little bit, but now they're starting to get a little sticky on prices. Okay, so back to the bull side of the ledger here is gold. Even though it had a bad day today, down 2%, this is still a very tight uptrend. In fact, I could draw a channel here, and this would be a very good channel to kind of watch. If we get an update tomorrow and we keep pushing higher, we could easily see 195, probably around the beginning of the year. Okay, end of this month, beginning of the year, could easily see 195 on GLD. Your trigger to sell or cover your longs is a drop out of the trend channel, or if I put my moving averages on, you can see here that my short-term moving average, this is a 21 period moving average, and you can see how far away from price is. So what you might want to do is add a 10 period moving average. I believe, let's see here. There we go. That's a little thin. It's a little hard to see, but we bounced off of that 10 period moving average today. Here, I can make it a little bit thicker here on that. Okay, there we go. So now we see that it bounced right off of that short-term, 10 period short-term moving average today. That would be a nice little stop if you were trading to the long side on gold. Okay, this might be worth looking at a hike and a sheet chart here. You can see that we've had embedded green candles with no wicks on the bottom until today's candle. When we have a little red, one candle does not a direction make, so I would just kind of keep an eye on this. We did have a wicky candle, meaning wicks on tops and bottoms, but we could easily have another up day tomorrow, okay? Easily have another bullish move tomorrow. So not time to take off your long position on GLD just yet. And for that part, silver, we'll just take a quick look at silver. Drop below my trend line here, but look, it held right at that 10 period moving average just as a comparison, okay? So it's still in that bullish uptrend. If it breaks this 10 period moving average, I would look for silver to drop back down to probably around the $21 level, which is about $1.50 worth of price movement there. Now, jumping over to bonds real quick. Okay, let's begin with the long end of the curve. This is TLT, which is the 20-year plus treasury. The rally remains intact here. Bonds continue to rise, which means that interest rates are dropping. And this is a very nice channel. Look at this. Two moving averages, a 10 period and a 21 period moving average, moving in tandem to the upside. Very nice. And then you could, of course, draw the trend channel of your choice here, okay? And just as long as we stay within, embedded in that channel, you know that interest rates are rising interest rates are dropping because bonds are rising, all right? And we would have a target here of $95 in, let's see here. Let me do a little analysis for you here. Let me bisect that and stay in the middle of that channel. And we're looking about mid-December. We could be up around that $95 level on TLT. I'll just leave this here so we can kind of track that. Now, as I mentioned, interest rates drop as bonds rise. So yes, you see here that interest rates are declining. Now, what's interesting here is we did have an embedded Elliott wave pattern here. And let me pull that up, okay? And you can see here that this wave 4 pullback here, okay, is still valid, meaning we need to watch this sector of the market very carefully here. It's just the opposite on the long end of the curve. In fact, I'll pull that up for you. Let's go back to TLT. You can see the wave 4 pulling to the upside, and look where the wave 5 target is, way down here. Okay, so, you know, the bond rally could continue and still keep that bearish Elliott wave pattern intact. Something we need to focus on very carefully over the next, I would say, because these are bonds and they don't really move very much, I would say over the next couple of months, we really need to watch these carefully. Now let's go into, let's go into the short end of the curve, SHY, sorry about that. All right, let me zoom in on the chart a little bit here. This is the 1 to 3 year Treasury bond ETF. And you can see here that I have my 10 period average shooting higher. Same thing with my short-term moving average. In fact, that 21 period moving average just crossed over the long-term moving average, reinforcing a move to the upside, which means lower rates. Now, that's over the short term. We're seeing some short-term relief. I would bet after the new year, after January 1, is when we could probably keep this pattern going for the next 3 weeks or so through Christmas. After the new year is really where we're going to watch this closely, because things could change when the calendar flips over to 2024. So lastly, the good news here is what it's done to the inverted yield curve. It has flattened once again. And if we look at the 2-year and 10-year Treasury yield in curves, that inversion has flattened. We are no longer inverted. Well, we still are inverted. Okay, we still are in backwardation, but the flattening of that curve will get us back to some sense of normalcy within the bond market. Doesn't mean interest rates are going to necessarily give us a lot of relief. We'll see what happens in the new calendar year. But as you can see here, we're up off of those. We were dropping back down to that half a percentage point spread. Now we're 34 basis points better, not the best, but bonds are definitely headed in the right direction over the short term, Brandon. That's what we're seeing here on the charts.
Just watching you go over your charts, I want to take you all the way back to the SPY. You were talking about SPY, and you were talking. You show the hike in the sheet candles, which I love every time you talk about the SPY. And things starting to get wiki, is what you said. Get wiki with it. When it starts to do that, when it starts to get wiki and things like that are happening, how long do you wait before you start to act on all that wickiness? Obviously, you can't do it by the first wick, second wick, third wick, maybe, who knows? But right now, I mean, it looks like it's ready to roll over. Is that something that makes you want to put a trade on, or are you still watching that at that point? If you look at that. I mean, we got 5 wiki candles in a row on that S&P chart there.
There's 2 ways to go about this. You can be the aggressor, or you can wait for confirmation. The aggressor would put a bearish trade on now and keep a stop up here, probably above 460. Do not put your stop right at 460.00. You will be taken out of your trade when you don't want to be.
I know. I noticed this back when I was trading, those round numbers for some reason. It always goes to those round numbers, and then
you want to do like 461.37 or some odd number like that. 461.37 or something. Now, the more conservative trader, right now we have what's called the setup. Okay, it's a 3-step process. I'm giving you a little bonus coverage here. 3-step process: the setup, the signal, and the trigger. Okay, the setup is right now. We don't have a signal. Well, the signal's being developed. That's these wiki candles. But the setup has occurred when we reached resistance here. The signal are these wiki candles. This is when we prepare for a bearish trade, whether we buy puts, do a put butterfly, sell calls, short stock, whatever it is that is negative delta, okay? Then we're waiting for maybe a confirmation. That would be the trigger, say a solid close below the 10-period moving average with maybe even a confirmation lower close, which would be 2 closes below the 10-period moving average. The problem with that is sometimes market moves fast and you might not get your trade off that you wanted, but that's the more conservative way to go about it, Brandon.
Yeah, that makes sense, and that helps a lot. So what earnings do we have coming up? And then after that, what trade do we have to look forward to this week?
Well, believe it or not, earnings season continues. We're not done yet, even though the earnings season is over, which the talking heads say, and I don't want to be classified with them, even though that's all you see of me. We have a bunch of earnings still occurring. Tomorrow, well, really today, it started with GitLab. Now, that's not a household name necessarily, but that is a stock that does have a lot of volatility around it, so we like watching that one. That happened right after the market close, actually just now. So let me just take a look on another, and I don't have data coming in on it, but they should have earnings right now after market close today. Outside of that, there we go. Now it came up. Up 16%. Nice move on GitLab. My goodness. Up 16% right now, post market. That would have been a heck of a trade, but we made some money in that when we traded it within our publication because implied volatility shot up and we took profits on that of about 20%. But now it would have been a big winner, up 16%, trading at 61.60 in the aftermarket. Nice move on GitLab. Okay, so going through the calendar, we have a Smuckers tomorrow. The reason I added that to my list of watches is because SJM, believe it or not, over the years has had some great volatility in it. And every now and then that thing will pop. And, funny being, that they make jams and jellies. Their last earnings announcement, they dropped about 10%. So, you never know when these things reemerge as big movers. But that back in the day, we traded Smuckers quite a bit. AutoZone is always a big mover. Signet, we have Toll Brothers aftermarket closes tomorrow. The big housing builder. And then on Wednesday in the morning, we have Campbell Soup. Again, another one of those names where you might not buy a straddle or strangle. You might sell a straddle or strangle, typically on Campbell's. But then we also have GameStop, which is a big name from the past. And then we move into Thursday. You have Dollar General, you have Lululemon, you have DocuSign, Broadcom, Vail Resorts, all sorts of kind of common names that are still here as we enter the first week of December having their earnings announcements.
Earnings are always fun because I think there's more ways to play earnings just because of the volatility that surrounds earnings. And if you know the stock and if you know how to play it, you know how it's reacted the last few earnings, kind of that helps. So that's really fun to look at always, Jeff. Do you have anything else to say? Where can we find out more, Jeff?
Well, how about we keep an eye on one particular stock this week? Okay.
As always.
I'm looking at Dollar General. Okay. And Dollar General this week tends to be pretty good mover. And so we're going to keep our eye on Dollar General. Now, the thing about this is you'll notice here that I'm with the flat bottom of that risk graph. Okay. The flat bottom of that risk, the black line on that risk graph, that indicates it's a strangle rather than a straddle. And that is to ease up on the cost of the trade a little bit. But if you want to see more on how we trade these, I have a free download. We talk about this weekly, but it's our free gift to you. It's a free little ebook on how we trade these types of strategies in and around earnings events. And that is at ewotrader.com/straddle. And that'll direct you to how to get a free copy of how we trade these things around earnings, because they're not like you probably were taught when you learned about trading options.
Well, I would say the market's ever trading. And so, once you sign up for that guide, go get that, obviously, because that'll give you the basis. But then watching Jeff every week helps to kind of round that out as well, because I think the market is evolving like year to year, day to day, month to month. It's always evolving. So I think there's always a new way to trade. Jeff, thank you so much. Yeah, thank you so much again for dropping by the Hub channel again to help us out and kind of go over the trades, go over the markets. Your insight is valuable as always, and we really appreciate it. If you haven't subscribed to the channel, by all means, do so by hitting that subscribe button. Go ahead and hit the like button on this video as well. It really makes us feel good. But leave a comment. If you guys want to let Jeff know how he's doing, if you have any questions for Jeff, leave a comment. We go read those and we go check those out so Jeff can see what's going on inside your heads and maybe what he can cater to next week here in the show. Thanks so much again for dropping by, and we will see you in the next one.